Good afternoon, everyone. Today I'm chatting with Trent Mell from Electra Battery Metals. We thought today would be a great day to have Trent on because the company just announced that they've received $20 million from the Department of Defense of the U.S. under Title III of the Defense Production Act, which is going to get the company $20 million closer to their $60 million goal of getting to production for cobalt refining. In this interview, we discuss what the process was like to get this funding. We also discuss what the funds are going to be used for. And we get into the changing battery chemistry within the electric vehicle market and what it could mean for cobalt. All right, everybody, enjoy the interview. Trent, thanks for joining us today.
Hey, thanks for having me back, Steve. Appreciate it.
So congratulations, first off, on the big announcement. The Department of Defense has awarded you guys $20 million. So first off, I got to ask you, what are the funds going to be used for?
Well, it's going to complete our phase one. So we've got an existing permitting refinery location north of Toronto. And so it's pretty unique to have the U.S. government funding into a foreign nation. But here we are. So it's the first bricks and mortar investment of this kind that we've seen into Canada in a long, long time from DoD. But the idea is to try to onshore the cobalt supply chain and reduce reliance on China. That's the basic premise.
So I'm curious because we're talking about cobalt here, and we're talking about the Department of Defense. What's the military or national defense sort of agenda when it comes to cobalt? Is that kind of what they're after here? And if so, why?
Yeah, when you look at Electra and our audience, we're selling to LG, and we're going to be supplying cobalt for lithium-ion batteries. So you think about the battery supply chain, but of course, you've got commercial applications as well. Could be walkie-talkies, could be drones, could be military vehicles. And, the idea here is not to get their hands on cobalt today. The Defense Production Act that this was funded through, it was passed in the 1950s on the heels of the Korean War, when America realized that the industrial base wasn't adequate for that war effort. It kind of carried us through the Cold War. There have been investments into light armored vehicle work in Canada and things of that nature. And so along the same vein, it's okay, we need the cobalt here for when we need it, right? There's not a wartime, but let's strengthen the industrial base. Let's reduce our reliance on China. And if we ever find ourselves in a difficult situation, then we know we've got the cobalt, on our shores.
Now, something that I think that a lot of investors are going to be curious about is how challenging was it for you guys to go through the due diligence aspect with the Department of Defense?
Yeah, when I compare, look, as the world's policeman, America kind of sets the geopolitical agenda and the allies follow, right? So whether you're an entrepreneur like me in Canada or Australia or UK, it's a different tone when you start talking to the American civil service writ large. I'm talking DOE and state, because the agenda here on onshoring and on reduction of reliance on China really is set by America. And so viewed through that lens, there's a strong clarity of purpose. Now you bring it to DoD, and the focus is even stronger. So it's been it's not a short process. It took close to 2 years, but it was actually DoD that reached out to us and said, "Look, we've got Title III DPA opportunities into Canada. We think we should have a conversation." And there it began. But to your point, Steve, the diligence was deep. It was very extensive. So the engineering input, the costing exercises, the thousands of lines and Excel documents. It was a pretty thorough review. They wanted to make sure that they were backing, a reasonable estimate in a project that was viable.
Now, I'm sure you understand that our audience is largely junior mining focused, and they could be investing in various different types of commodities. If they're watching this and they're kind of curious, okay, would this apply to my lithium company or my nickel company or my phosphate company? And they're getting kind of excited about this idea. I'm curious if you have any thoughts on what commodities that are of interest for Title III of the Defense Production Act. Is the reason that they reached out to you guys because there's just so few companies focused on cobalt refining? Could this apply to other Canadian companies that we could hear more news about? Could you give us a little color on that?
Yeah, look, the answer is yes. I think this is the beginning of a new partnership. We haven't seen the Canadian response. Typically, when the U.S. invests, there's an expectation that the two governments will move together. And so, we're still working on that. So the DoD is out, but the understanding between the two countries is that, from whether it's the Inflation Reduction Act or the Ukraine Supplemental Appropriations Act. That's kind of where the battery supply chain money flows. And the only way to get that money out of the US and into Canada is through DPA Title III. And by the way, as of the spring, you can also apply this measure into Australia and into the UK. So now you got 3 allied nations that can receive money. And it's all about, what do we need to strengthen the critical mineral supply chain? So lithium, yes. Graphite, yes. Nickel, yes. Before us, there were 2 exploration companies that received funding as well, Lamico Graphite and Fortune Minerals, again, Cobalt as well. In our case, it's a bricks and mortar investment, so more substantial in terms of dollars and perhaps profile. But there is a second round going on now, and there are a few mineral companies that I'm hearing are going through the process we went through. So this will be a trend, and you know, if they can help us pick the winners, maybe those juniors that are selected get a profile and get more investor attention than they otherwise are getting today.
Now, you guys did secure $5 million from the Canadian government back in June to develop your recycling tech. Are there any other government funding sources that you guys could look to here?
Yeah, there are. There is a number of programs in Canada that we are Canada, Ontario, that we continue to look at. And you're right, we did get a $5 million grant from Natural Resources Canada. That was specifically de-risking our second project, which is going to be recycling once the Cobalt plant is built. So DOD, the 20 million US, so call it 27.4 Canadian, is about a third of the gap, of the funding gap that we have. And so I've told investors that as between government programs and strategic investors, we are going to try to fill all or most of that with the non-dilutive capital. So this is the first domino, more to come. Can't say much about it, but yeah, definitely more opportunities out there.
So my understanding from 2 news releases ago is that you guys needed $60 million to put towards the facility to close that gap that's needed to get to production. Now, with this $20 million, I assume that number is $40 million. What's the plan to close that gap?
Yeah, no, you're right. So we're a third of the way there. And we've been working on a funding solution for about a year. Recall we paused our production, paused the construction rather, about a year back in the face of inflation and supply chain of the post-COVID world that seems like a distant memory now. So this is it's the first step. And so it's going to take us a few more, maybe weeks, hopefully not months, to put the other 2 pieces in place. But we're not looking to the equity markets per se, because in reality, it's a challenging market for the small caps right now. So we're looking to government first, and we've got 1 program here. And then we've got a few conversations with traders and strategics that would happily come in, I think, anyway, once we have a little bit more government programming kind of lined up. So I don't mean to be opaque. We're just waiting for it to land.
I understand that. Now, when you say traders, you mean like commodity traders?
Commodity traders and family offices and sort of big check opportunities that would be maybe debt-like, not a lot of equity, just to get exposure and partner with us.
So when we look at what you guys do the cobalt refining, and then there's the recycling aspect to the company, and then you guys also have exploration properties. Is it fair to say that the primary focus of the company right now is getting to that sort of cobalt refining?
Yeah, it is. And so Cobalt today's, I think we're at 8-year lows on the commodity. The nice thing about our business model is we are kind of price agnostic, right? We're buying and selling contemporaneously in terms of how we price our products. And so we're earning a fee. And if we can get this Cobalt plant up and running in short order, then we've got a fairly consistent outlook on what the cash flows would look like. And that could then in turn fund our recycling plans and our future growth, including into nickel.
So I don't know if you saw this story, but I think it was last week, or it might have been 2 weeks ago. Samsung announced that they're working on a new 600-mile range battery with a 20-year lifespan and a 9-minute charge. By the way, I have no idea if this has cobalt in it. I spent time this morning trying to figure out. There's speculation that there's a lot of silver in this battery, but the reason I bring this up is that there's clearly a lot of shifts in battery technology every couple of years, whether we're talking about the NMC or the LFP or whatever. I'm curious how closely you follow these technological changes and sort of how you forecast cobalt playing into the market in the long run.
Yeah, we follow a lot of market analyst forecasts and kind of build our own view on what the outlook is. I will say, simplistically, the demand for our product 5 years out is double. For the first 5 years of production is double anything we could possibly produce. And so that kind of gives you a good indication. Second thing, closer to home, 30 battery plants being built in North America announced. We'll see if they all get built, all in NMC. So we follow it, but a lot of these, technology plays are probably years out, and the capital investments aren't there to back them up commercially yet. You may recall back in 2018 when Cobalt went on a run, people were talking about vanadium, and vanadium being the next best thing. Now we're seeing that in grid storage or stationary storage. Never made its way into vehicles. So these things kind of come and go. What we're hearing out of Korea, which is our big market in terms of buyers, is a reversion away from the low nickel to the mid nickel formulation. So NCM, right, the nickel rich cathode being the dominant battery, LFP, no nickel, no cobalt. Yeah, that maybe we're projecting 30% in a mature market of a pie that keeps growing. But instead of this 80-90% nickel content at the expense of cobalt, the 622, so 60% nickel, seems to be the preferred approach. Better for battery stability, easy to make, longevity, and so forth. So yeah, not worried. The next decade, we've got projections. The world needs a lot of it. 90% of it's coming out of China. And so I think we're in a really good place to supply the market.
Yeah, I know you're not like a battery chemist or anything, but do you think that part of the reason that we're steering away from cobalt is just because it's just so hard to come by?
Yeah, I think in 2017, there were two things, right? It went up to like almost $50 a pound. And so I think supply chain buyers were kind of freaking out, and it's concentrated in the DRC. And then you had the overlay of child labor and unethical practices. That part is a little easier to fix, right? We, as miners, going back to diamonds and gold, we can certify supply chains and audit and get comfortable in terms of cleaning up your supply chain. But then cobalt, I say cobalt's now at $10 a pound instead of 50. Meanwhile, nickel had a great run, right, in 2022, 23. And so when you sort of look back and take a longer term view, commodities are going to go up and down. So I think the fear of cobalt has dissipated, and it's being replaced with a more pragmatic approach of what's the best chemistry, what's our business plan. And now you're getting a lot of cobalt as well out of Indonesia from those nickel mines. So I think the fears have calmed in terms of that element, and probably replaced by where are we going to get our nickel from, right? But that's that's the current focus of sort of commodity scarcity.
So if I'm an investor watching, Trent, and I'm sort of thinking, okay, well, this could be a turning point for the company. What am I looking out for over the remainder of 2024? What are the next big steps that the company's trying to achieve?
Yeah, I've always said that the challenge we have in the West, right? We're trying to build a supply chain against the backdrop of a mature system in China that's backed by a lot of money and cheap money, right? You can borrow capital there at 3.5%. In Canada, you're happy a company of our size to be at 13.5%. And so I think the government support that we've been working on for quite some time now, it really de-risks the asset. We have clients lined up to buy the product. We have product coming in. We've got our permits. And so I think it's above the short term. It's okay, where's Electra going to get the next little bit of money? And then it's remobilizing the team, getting ourselves into production. So all those construction milestones, call it 90 days for us to remobilize, a little bit over a year to build, probably producing sometime in 2026. And all the while, you're going to see us advance our recycling flow sheet. We've got a couple of patents we're going to file. And so that recycling upstream, downstream, we've got a partnership with an indigenous community on the shredding. So you'll see some developments there. And then longer term, we do have nickel aspirations, and we've got a number of conversations going on because it's not a big step to go from a hydrometallurgical cobalt flow sheet to nickel. Difference being there's a lot more nickel in a battery, so it is a bigger plant. But the main driver of value right now has to be the cobalt plant and just getting that de-risked and into production.
Well, Trent, thanks for hopping on here today. We appreciate you guys coming on here, and congratulations on the big news. And hopefully you'll keep coming back on here in the future as you guys continue to execute on your strategy.
I would welcome that. Thanks so much.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.